Welcome back everyone to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, today there was no recovery in the offing. The market has been trying to jostle with the bears, and it seems that at this point of time the bulls corner is losing. If you look at the Nifty and the Sensex, they are both selling off quite staggeringly at this point of time, down over 1% each at this moment. The Nifty 50 is trying to hold to that 16,400 crucial support level, but at this point of time, at this juncture, it is failing. The Nifty is below that juncture, and it is possibly a concerning point for bulls because that could trigger further more selling in the days ahead. Apart from that, if you look at the laggards, Santo, banks, IT and FMCG, those are the three sectors who are the biggest laggards on the indices, and they've been taking them down. But on the positive side is the commodity plays such as ONGC that are keeping the index a little bit higher or trying to probably hold the fort for bulls.
Well, CJ, if you look at the market internals, second line shares are faring slightly better than the large cap.
Surprisingly today, yeah.
Which seems to indicate that retail still has not given up hope.
Thank you.
Yeah.
Thank you, Santo.
So typically, what happens in the market is that unless really retail investors throw in the towel, you don't see the market bottoming. And there's been a lot of attempts to kind of catch the try to guess the market bottom, but to me, one clear indication would be that retail really panicking, and the feedback we are getting from dealing rooms so far is that most HNIs are still, they're nowhere near levels of panic, because while the market has come off sharply from its highs, you must also remember that many of the stocks have risen by about 5 to 10 times from their lows.
I mean, a 20% decline is nothing if you have made almost 1,000%.
Right. So people are still sitting on a lot of money. Right now, it's just some of those profits evaporating. It's still not come to a point where people have started losing capital. So I think probably by these factors, market could be still some time away from bottoming out. But CJ, you must notice here that the market is struggling to make newer highs. Every time it does pull back, the high is lower than the one it had previously made, except you could argue here that it's not breaking the previous bottom.
Absolutely. I mean, of course, how will we make highs when FIIs are dumping 3,000, 4,000 crores worth of stocks every day on a daily basis for the past 8 months now? And of course, in the face of such a selling pressure, Santo, I would just thank my stars that we are not worse off than where we are at this point of time, at least on the aggregate index levels throughout, from the large caps to the mid caps. But yes, I take your point. At this point of time, it does not seem like there is panic. Could there be panic ahead? We do not know. Has already, probably we have seen the worst of it. We do not know yet. All of it will depend, given the environment that we are in, macro environment that we are in. You cannot take anything for granted at this point of time. It is basically a day-to-day. I mean, in sports, you will always say, when when India is going to play the World Cup or Champions Trophy, it's always match by match, right? That is what the best coaches and best captains will always talk about. And I think the best investors at this point of time in the market are also going day by day, or probably even the greatest ones are probably not tuning into the market at all, and they're just enjoying their holidays with their family and friends.
More power to Robin Hood investors, I would say.
Thank you so much.
That said, let's dive into the stocks that has caught the attention of B and CJ. Starting with Gujarat Gas. CJ, this stock, overall the sentiment on gas stocks in general was quite negative till about a couple of months.
I would argue it's still a little
negative. It is still negative. Okay, I don't disagree with that. In the case of Gujarat Gas, I think particularly the negative sentiment was even higher because Gujarat Gas mainly caters to the industrial segment, right? And so it does not have the luxury of getting administered gas at administered prices. But the fourth quarter number was like, it was completely a big surprise. The company came back very strongly across everything. Of course, volumes were down, which is only to be expected, but the company did manage to offset it with some decent improvement in realizations, and also it's increased its presence as well, added some 1,54,000 more households and landed 423 new industrial customers as well. So this is a stock, I think, which one should keep an eye out for, because when the new gas pooling policy takes effect, somebody like Gujarat Gas would be in a better position to benefit from it, because right now it's been mostly getting a big chunk of its gas outside the administered prices, since it caters to industry. But this will change, and I think Gujarat Gas is in a better spot compared to some of the other gas
Well,
companies.
Santo, you talked about the stock few weeks ago, and when its earnings came out for the March quarter, and I made that point at that point of time. I'll make it again. I do not think that the margins are going to be able to sustain at the levels that they are in. We know that natural gas prices are expected to go up even more in the coming 3 to 4 months. When the September revision happens, there is a good possibility that domestic administered prices will be raised, and therefore the probably the best of margins we have seen in the March quarter, and I do not expect that to sustain. Coming back to the present time, we have seen massive short build up in the stock today. The stock is down about 6% at this point of time, and open interest has shot up quite considerably in the June futures of the stock. So that is suggesting to me that a market at this point of time is looking at even more downside. I think the dampener from a sentiment point of view has come from the fact that the company has gone ahead and taken a price cut of about rupees 5 recently, and that is at the argument is that because spot LNG prices have come down from about $30 to about $25, they have therefore taken and passed it on to the industry. But investors would argue that, bro, LNG prices are still quite elevated, right? Even at $24, $25, they are still quite elevated. So why would you not, in fact, take advantage of the reduction in the spot LNG
to
price?
Boost volumes?
Yeah, no, I don't think so. There is an argument to boost volumes. I don't think that is the way it works at this point of time. At this point of time, they should have probably tried to negate some of the losses that they had taken earlier when they had seen a hit to their margins. Probably that has been a little bit of a dampener on the stock right now.
They're sharing some of the profits. Remember, the fourth quarter numbers were really good.
Sharing with the profits with whom? I mean,
with the shareholders, with your
sharing
consumers.
with the shareholders, not with your customers. That said, I feel that LNG prices are still quite high at this point of time, and the other issue, as you pointed out, the allocation policy, the gas pool allocation policy, that has not been clarified as of yet. And Gujarat Gas at this point of time is getting a lower share from the administered pool. So that means that it has to go to spot LNG market, where prices are obviously quite higher compared to the domestic market, and that in itself is creating pressure on the margin. So for me, the outlook on margin on profitability remains quite bleak at this point of time for me to be bullish on the stock.
One last point here, CJ, you mentioned about sharing profits with shareholders rather than customers. If you have happy customers, right, that's only when shareholders will be happy. Anyway,
we can debate about this forever. In that sense, one stock where there are no such concerns is Oil India. I mean, we know what its bigger brother ONGC has gone throughout this year. It has seen a stellar rally, and Oil India is not so far behind. The company has seen a stellar run up in the stock today on the back of surging crude oil prices. Of course, crude oil prices are higher despite the OPEC raising output, because Saudi Arabia has increased official selling prices for all the crude deliveries for Asian customers. If you look at the market sentiment at this point of time, I believe initially there was reluctance that, oh, come on, $100, $120 per barrel crude oil could not sustain. I mean, US shale will come back. You will see prices. I mean, a brokerage house like Citi was suggesting that prices will come down to $70 per barrel as soon as last week. But just recently, even Citi has been forced to accept that prices may stay above $100 per barrel for a very, very long time. And I think that is the acceptance that the market is also coming to at this point of time. And you are seeing that play out in the shares of ONGC and Oil India in particular today. Apart from that, Kotak Equities recently upgraded the stock to add rating. They are suggesting that, given that they themselves have also raised their outlook for Brent crude oil futures to above $105 for the rest of FY23, and therefore they expect EBITDA of Oil India to rise by as much 71% in FY23. They raised their forecast for EBITDA by 71%. So that goes to show quite a strong operating environment remains for Oil India, and this is one stock I keep on saying for ONGC as well. If you have to make money in this market this year, probably ONGC and Oil India would be your first two bets on the portfolio.
Can't really argue against that, CJ, because clearly these are stocks which are a play on crude prices. And when you have crude prices rising the way they have been doing for some time now, there's nothing that can go wrong.
Absolutely.
Because these stocks have underperformed for quite a long time. As a result of which, they're also underowned. These stocks are not really favorite with institutional investors. So typically when the cycle changes, you see a huge surge of buying, and suddenly that's when these stocks take off. So Well, I won't really, argue against that one. The third stock
My moment.
on our watch list today is Ashoka Buildcon. Again, good set of fourth quarter numbers and a fairly strong order book position as well. Its order book at the end of the fourth quarter was about 13,700, and in April it has added another 900 crore as well. That takes the order book total to about 14,600. Besides, the company has said that it's quite confident of bagging another 10,000 crore worth of orders in this current fiscal. This apart, it's looking to monetize some of its build, operate, transfer projects, and in fact, one of the Chennai build, operate, transfer projects is close to finalization. In all, according to Motilal Oswal Financial Services, the company is looking to monetize about 3 of its assets in this fiscal itself. So overall, it's a fairly good picture out there. The balance sheet is in great shape, and the steady rise in revenues also indicates that the company has been able to execute well.
Well, Santo, you can't argue against a company that is trying to, monetize a lot of its assets in order to pare some of the bulging debt on its balance sheet, and therefore it is being successful on that front. But my only cautiousness will be around the order inflow guidance that they have given. They are expecting about 10,000 crores of order inflow in FY23. But if you look at some of the commentary that is coming around NHAI tendering, at this point of time, it seems the competitive level remains quite high for NHAI tenders. On average, you are seeing almost 15 bidders competing for the same contract, which is also leading to a reduction in what do you call the premium that bidders usually have. I mean, the premium has gone down from 16 to 4%, and in some cases, bids have been or tenders are being given at a discount to the cost. So that goes to show the level of competition that is out there, and I feel that is a big risk to the margins. Although the management has said that they will not sacrifice on margins for growth, but well, the market is trying to price you for growth, and if you cannot deliver growth in an environment like this, then probably I don't know what you're going to do. So that is my only concern. Apart from that, if you look at the commentary that has come in from rating agency CRISIL, they're expecting a moderation in NHAI tendering or order outgo this year because of the limited budget that has been given in the union budget, as well as now government's priorities are probably a little elsewhere. They are focused towards fighting inflation at this point of time. The subsidy bill is swelling like a hot air balloon at this point of time. So probably we may not see as many orders coming in from NHAI, and that could be a bit dampener on the order book side, and therefore that would be my only point of concern for Ashoka Buildcon.
Execution and balance sheet. I think
execution also is not really a given, Santo, given the high cost that the company has been seeing. I mean, the margins have come down to 10% right now, and in FY23 they do not expect them to rise beyond 11 to 12%. So I feel that even execution may not be a given for a company like Ashoka Buildcon.
Well,
one stock where sentiment has sort of become a little positive these days is Sun TV Network. Now, of course, there was a deferment of the new tariff order that has all become been a boost. But recently, Elara Securities came out with a interesting report on the IPL media rights auction. Now, Elara expects that IPL media rights auction could triple to fourfold rise, could see threefold to fourfold rise in value to about 50 to 60,000 crores. Now, why is that a good news for Sun TV, right? Sun TV does not show IPL, but Sun TV owns an IPL team called Sunrisers Hyderabad, right? Now, Elara expects that given that almost most of the IPL teams gets about 70% of their revenues from IPL TV rights auction, this will boost the valuation of Sunrisers Hyderabad, Santo. And right now, Sunrisers is valued about $987 million. Elara believes that the average or the base valuation of the IPL team could be as high as $1.2 billion. So that is your starting point in terms of valuation. So that itself is almost a 20 to 30% kicker in terms of valuation for Sunrisers, and that could feed into Sun TV's own valuation. If you look at it at this point of time, the stock is worth about 16,000 odd crores, and Sunrisers alone is about 7,500 crores. So we could see a good amount of upside in Sun TV's own valuation from the IPL auction. Apart from that, if you look at the overall market for IPL, Elara is quite confident that this TV rights auctions could keep on growing, or revenues could keep on growing at a rate of about 10% on an annualized basis, which could be further boost for future auctions that might happen. So definitely, at least even if the normal side of the business is quite okay-ish, given that ad sales have taken a beating with what FMCG companies are doing, but the IPL side or the cricket side of the business is definitely kicking in and helping out the stock for Sun TV.
Well, that would entitle Sun TV for a holding company valuation, which is not high, more so in this kind of a market. So that's an indirect play on Sun TV. But if you look at the major concern what the market seems to be having, it's that OTT is right now the space where all the action is happening. And Sun TV really has not been investing very heavily in that. It had planned some big investment, but since much of its energy seems to be focused on the movie production, it has not been really been able to do that. And according to Motilal Oswal, that is one of the major concerns about the stock. Besides that, CJ, if you look at the growth in top line and bottom line over the last 5 years, the growth has been very, very tepid, in single digits. Now, one could argue that it's already reflecting in the low P multiple that the stock is now quoting at, and probably a lot of that is already captured there. But I don't really see the market responding in a big way to the IPL team's valuation. Because if you look at the stock price, it has not really gone anywhere. After peaking out sometime in November, it's been steadily going downhill, except for a brief bounce recently.
Well, Santo, of course, the movie production argument, it's a double-edged sword, because of course you have to invest a lot of capital to make these movies, which are not always a given. But then you see the success of movies like RRR and KGF, and then you question that, why not get into the movie production business at this point of time, when demand for South-based movies are not only soaring in southern India, but also in other parts of India. I mean, you look at theatre occupancies for southern dubbed movies in northern India and western India at this point of time is almost close to 90-100%. I mean, even Hindi movies are not being able to keep up.
So much so that some of the stars are heading south, down south.
Exactly my point. So I mean, if Hrithik Roshan is going to become the next, superstar in southern Indian films, you can get the drift, right? And therefore, I think probably that is what the management is also seeing in terms of probably investing a little bit more on the movie production side than on the OTT side, because at this OTT side, there is also a little humbleness here. I feel that they realize that they cannot at this point of time compete with the likes of Amazon and Netflix, and therefore it is probably not so much of a priority, given that overall their OTT business has been quite flourishing. It has not been bad. It has not been a money maker so far, but it's also not in a bad position overall. So I think that would be my argument.
One last point before we move on to the next stock. Sharp rise in working capital days from 103 to about 355. That's a really big jump that just caught my attention. SBI Life Insurance is the last stock on our watch list today. Now, positive reports on the insurance sector in general from CLSA as well as Kotak Securities. Overall, life insurance stocks have seen some kind of a bounce over the last couple of months, and according to CLSA, the valuations are quite undemanding at this point in time, and they are also seeing a decent growth in the annualized premium equivalent. Now, one of the concerns about life insurance companies in general was that you had LIC coming out with its issue that was priced very attractively, which led to some shift, but that storm has now blown over.
Actually, I think it's blown in favor of private sector players. I mean, it's just showed that what private sector has and what the public sector or LIC in this instance does not, right?
Yes, and also the other thing is that there was some concerns, especially since LIC's non-par portfolio is just about 5 to 6%. It would get very aggressive in that space and start competing with the private players, but that concerns have also eased somewhat. SBI Life is the top pick for both CLSA as well as Kotak Securities. So that's my argument for the stock.
I can't argue against that, Santo. I mean, for me, I also feel that this is another sector where the drift is, the wind is changing. I mean, 2 years of underperformance in 2020 and 2021, largely because, of course, they were also facing, high death claims because of COVID, and therefore there was quite a high level of provisioning that was happening on COVID claims from most of the life insurance companies. But it seems that as COVID is also, receding, and you have overall industry growth coming back to pre-pandemic levels, at this point of time, it seems like the life insurance space could be one that could see good earnings visibility, and therefore you are also seeing that in the outperformance of some of the life insurance companies out there over the past 2 to 3 months. So I think that is one sector that probably, along with crude oil and maybe banks, if we do get that credit growth back, could be one of those sectors that actually end up performing this year.
So what I mean, the most obvious thing that the market now is keenly awaiting for, no really guesses about that.
Before I give you what is on the horizon, Santo, I think we should take a look at the market at this point of time. We have actually seen a little bit of a recovery in the market. The Nifty is down about 0.9%. We were down about 1.1 to 1.2% when we started a show. So in the past 15-20 minutes, we have seen a little bit of a recovery.
That's clutching at straws, CJ.
I mean,
that
but Santo, the crucial point is that we are comfortably above the 16,400 support
means
level.
nothing.
So,
it will break that tomorrow
it does,
morning first thing.
I hope. I don't think it will.
You can
I mean,
just about get some good sleep tonight. That's
this is a good level for the bulls to hold, and I feel this goes to show that there is some fight left. But it's the mid-cap space which is still outperforming or at least falling less than the rest of the market.
Losing less money than the rest of the market is how I would put it.
Nifty mid cap is down about 0.6, Nifty small cap is down about 0.5%. India VIX is up 1%, which is quite natural given that we have a major event coming up tomorrow, and coming to the horizon, we have the RBI's policy outcome that is going to come. The Monetary Policy Committee's meeting will conclude tomorrow, and we will have the governor making the statement and giving out the result of that meeting. The expectation is that a CNBC TV18 poll showed that the expectation is that there could be a rate hike in the tune of 25 to 50 basis point, more veering towards 50 basis points. Than
what's your take? What's your take, CJ? Where are you betting on?
I think it will be 37.5, Santo. I think.
Come on, CJ. Jokes apart. What do you think?
No, I'm not joking. He doesn't like to, he doesn't like the market reading his brain. That is what the RBI governor has all. I feel I get the vibe from him that he doesn't. He wants to keep everybody guessing about his next move. So probably.
But it's the MPC which takes the call, right? You're
that
being
is
a little
true. I mean,
unfair
you can always convince other members, right? You can always convince. I mean, he has that convincing power. He convinced us about the greatness of RBI over the past 2 years, and they have been quite great. Although the inflation bit has not played out to the script. But I feel more than the rate hike, I think, Santo, the most crucial thing from the policy meeting tomorrow would be the expectation on inflation. What would be the RBI's estimate on inflation for the rest of FY23? Also, you have to also take into cognizance of the fact that government has come in with several measures to try and tame inflation on the supply side. Now, how RBI will factor that in, whether it will have any repercussions on its inflation forecast, that will be, I think, the most crucial thing. If it is too hawkish, then markets will probably take that into stride and suggest that probably they're going to be more aggressive rate hikes. But if it is too dovish, I think market might raise a few eyebrows and question the RBI's estimates on the inflation side. So I think that remains
either ways, probably the market is not going to take it kindly.
I think market has already probably factored that a little bit today. I think if you look at our performance, we are underperforming some of the global markets at this point of time. Although Asia is in red, it's not seen the sort of selling that we have seen today in the market, and US futures are also not indicating any deep cuts in the US markets later in the evening. So for me, I think probably a lot of the jitteriness that we are seeing in the market is related to the RBI's outcome tomorrow.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and I hope you did really enjoy it. Please do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, obviously, stay tuned to moneycontrol.com and the Moneycontrol app. We will catch you live again at 9 AM tomorrow.